Hey, what's up, Silver Trader FM subscribers and viewers? Major down day today as well as yesterday, continuation from yesterday possibly, but the Nasdaq is leading the way down, almost 2%. Big down move. We've been going up and up for the past 3 months or so without any major pullback, so this could be it. So wanted to review a couple of articles with you, and I'll provide some links below so you could read further on it. Buying dips in gold has been the right move for a decade, and we believe fundamentally that should continue as a trend. So buying the dips is a good time to buy right now, and along with these large moves down, you can see large moves up, and as you can review with the patterns here in 2006, 2008 and 2012, that seems to be the case. For example, in 2006 there's about a down move of 13% followed by an up move the following month of about 17%, and here in 2008 there's a down move of about 17% total. 2008 followed up with a 25% move upward the following months. So in 2012 we could see a 5, maybe a continuation of this downtrend, 5-10%. Then maybe we'll see a 15 to 20% up move, bringing us up back to the $18 to $2,000 range price action wise for gold. We shall see if that pattern continues, and more likely it should. Here's a seasonal pattern for gold, where January and February up 2% on average. March usually a downtrend. April, May, good month for gold. Early summer, sideways or downward for gold. Then August, September, upward. October, a down. And November, December, ending the year. Gold should be a uptrend for gold. So we'll see if that pattern continues this year. Here's more of a negative outlook for gold. Why gold prices are set for further decline. So this person just talks about why gold prices cannot continually rise forever. Also looking bearish move for Apple and Priceline as well, why they will not rise forever. And since they are part of the Nasdaq, we're seeing the Nasdaq getting a good pullback, so as we probably expected, nothing can go forever. The markets have been going up continuously for the past 3 months. 2% pullback is good today, and I'll cover I believe they should retrace back Fibonacci wise. Here's the US dollar index, where we're reaching the top, probably hit our heads on the $80 level, pull back down to 78. Then from there we'll keep pinching inward towards this symmetrical triangle and see if it's going to be a significant move up or down. The gold miners weekly chart, we did breakdown, major breakdown here in the 48 level. We cracked through it, so it's not looking good for the miners. And the futures, so this is the main part of this article. We're saying, okay, we're hovering around the 1600 levels here, 1650s. We'll probably bounce around a bit more, but if we continue downward we should find major support at the 1535 level, then ultimate support at the 1475. Believe me, if we can get down here, I know there's a lot of people stacking, not even playing the paper markets, that's willing to put a boatload of fiat money here in the $1,500 range. So we'll see if this does come true. If it does, back the truck up, keep stacking that gold and silver, since silver usually follows gold on the down and up trends. The general markets, where the financials go, the markets follow with it. So this past week financials are down negative 6.2%, and the past month financials are down negative 2.2%. so finding weakness here in financials, so we may continue this downtrend in the general markets. So looking at the S&P, here are several support areas on the S&P on our way down, so we should be finding support as we are now between this resistance support levels from previous weeks. So I drew a few of these lines: 1360, 1339, 1317, 12 1277, and I believe this should be the last area, 1255. So if you're looking at this from a Fibonacci point of view, look at the previous low and high. So that was low, that was a high, and you'll notice here that it traced back all the way to the 61.8 level before launching off in this multi-week, I believe there's about 3 months worth of bull run before it fell apart. So let's see if the same thing can happen here with this low and this high. So currently we're finding support at the 23.6 level. Probably find it again here near this area, 38.2. We may bounce up from this 1290 level, but we should find a major support level here in the 1259, 1260 level in the S&P. Then we may just rocket up from there. It all depends on when Bernanke can take this downtrend and pressure from his masters. See if another QE round will need to take place for us to launch in this market. So we shall see. So the trade in silver and gold, once again, we need to get above this 32.6 area to get bullish in gold, silver, and in gold we need to get over this 1706 area to get bullish once again. Looking at the charts of silver, the big picture, we're still in this downtrend. We need to blast over this 33 area to get into this green channel bullish trend. We are finding major support on this 31.2 area. If we breach that support area, then we should find support again in this round number of $30 and the major bull channel of $28. But if we do breach that, we should find support in this last level of support, $26. So we'll see how low we can go and continue stacking that silver. So as far as gold is concerned, we've established this new red area, downtrend channel. If we could blast through it, we could potentially go bullish again, but until we get out of this downtrend right here, then we'll continue it. Just wanted to point this out. So the major move down was this 5%, I believe it was, from highs of close to 1800 to the low of about 1688. Then we hit our head here and established a new high to low from the 1720 to this good support of 1611, 1612 area. So if we continue bouncing around in here, we may hit our head once against there, and hopefully we can find support in this 1600, 1605 level and bounce up from there. Otherwise we'll continue down and we could potentially hit these lows of 1545, 1530 level. So we'll see what happens with gold. Recently we've been following the trend of the market, so when the market goes down, gold, silver goes down for some reason as well, since it's all paper based. And we'll see if we could decouple gold and silver from the market heading downward. Either we go sideways, form a nice base and launch from there, or if the market hits that 50% or 60% level retracement, then we could probably use that as a launching pad for a future higher trend for gold, maybe to the 1800 plus levels. So we shall see. So this is Silver Trader FM. Keep stacking the real money. Definitely buy more on pullbacks, right? If you're trading the paper, use an opportunity to probably stack paper-wise in the USLV or the DSLV in the downtrend, but I'm looking for a good position to get back into the USLV to get some paper profits and hopefully turn that to physical soon. So Silver Trader FM, take care guys, I'm out for now.